This trading strategy that I'm going to share with you today literally has the potential to multiply your trading account, because this trading strategy is based on the smart money concepts which are used by the big banks and institutions to move the market. So using this tool, we will devise a trading strategy that you will love. But before we do that, please make sure to subscribe to this channel, as this channel is currently new and I'm trying to grow this by posting consistently, bringing you new strategies and indicators every week. Now, without any further ado, let's get started. Now, this AI engulfing candlestick patterns indicator is better than the normal engulfing candlestick patterns indicator. If you go ahead and add the normal engulfing candlestick patterns to the chart by the trading view itself, you can see that the trading view indicators are not giving us the signals that are very high probability. As you can see, it's giving us this buy signal here and it's giving us this sell signal here. But as you can see that in this buy signal, the market has already reversed from here. So this signal is very late according to the trend change. And the reason for that is that this AI engulfing candlestick patterns indicator is based on the price action, and it already filters out the overbought and oversold zone. So it will only give us a sell signal whenever the market is overbought, and it will only give us the buy signal whenever the market is oversold. So in those conditions, there are high probability of market going in the favor of the pattern. Now let's go ahead and add the second indicator, that is the fluid trade SMC light. And once we add this to the chart, this indicator is very unique because it gives us the idea about the supply and demand zones onto the chart. So in order to adjust this, because you can see that there are a lot of zones being plotted and we want to filter these out. So we're going to go towards the indicator settings, and here we want to turn off these outlines and we want to decrease the opacity to 0. Also, we want to decrease the opacity of this break of structure and this one as well to the 0, so that we will no longer be able to see it on the chart. Now this indicator is showing us all the supply and demand zones onto a chart. The supply zones are represented by this gray rectangle and the demand zones are represented by this blue rectangle. Now if we talk about the psychology of supply and demand zones, it's that at these zones there are a lot of pending buy and sell orders accordingly by the institutions. So once we detect these zones and once we detect the formation of a engulfing candlestick pattern in the favor of the zone, those are very good trades, as we're going to see now. Now if we go ahead and talk about the trading rules for taking short positions, the rules are as follows. First of all, there should be a sell signal indicated by the AI engulfing candlestick pattern, as you can see here, and also the market should pull back to this supply zone which is formed, as you can see in this area here. So this supply zone formed here and this supply zone is extending towards in the future. So there should be a sell signal given by the AI engulfing candlestick pattern indicator, and also the market should pull back near to this supply zone, because at this zone there are a lot of pending sell orders. So once the market reaches this area, all those orders will get triggers, and that will make the market move very impulsively in the bearish direction, as you can see here. So once these two conditions are met, we are good to take a short position, and we can take short position at the close of this candle here, and we'll be putting our stop loss at the high of this engulfing candle, and we can target initially 2:1 ratio. So if we go ahead and look at this, our 2:1 ratio is met. But one way to manage your risk properly is that you can break even your trade once 1:1 ratio is met, so that you are safe from stop loss, and then you can target the 2:1 ratio again. So as you can see that this trade was in our favor and we were able to generate our 2:1 ratio profit. And also in this case here, if we look at another example, you can see that the market pulled back into this supply zone, and also the AI engulfing candlestick pattern indicator is giving us this sell signal. So we can again take a short position at the close of this candle, and we can put our entry at this close here, and we can put our stop loss either at the high of this candle here, or we can also put it above this supply zone, and we can again target 2:1 ratio. So as you can see that 2:1 ratio is met, so we are again able to take profit at this level here by taking a 1:1 ratio of 2, which is again very good. Now let's go ahead and talk about the trading rules for taking long position. The first rule is that there should be a demand zone found by the supply and demand indicator, and if we zoom in a little bit, we can see also there is the AI engulfing candlestick pattern giving us a buy signal. So once these two conditions are met, we can go ahead and confidently take a short position. So once these two conditions are met, we can go ahead and take a long position at the close of this candle here, and again we'll be putting our stop loss at the low of this engulfing candle, and we can again target 2:1 ratio. So as you can see here, again our risk to reward ratio has been met, and this trade was a profit of 2:1 ratio. Now if your risk appetite is a little bit higher, you can also took a little higher 1 ratio trade. We would have been able to generate even more profit, but this all depends upon your risk appetite. Now here is another example. As you can see here, there is the formation of this demand zone here, and also AI engulfing candlestick pattern indicator is also giving us this buy signal at the close of this candle here. So we can go ahead and put our entry at the close of this candle, and we can put our stop loss at the low of this engulfing candlestick pattern indicator, and also we can target 2:1 ratio. So if we just go ahead and adjust our take profit level, you can see that our take profit level is again hit, and this trade is again a profit of 2:1 ratio. Now you have to follow these rules strictly, because if you go ahead and take any other trades, or if you do not follow these rules, you will be hitting a lot of stop losses. The rules, if I repeat again, are that first of all, there should be a formation of either a supply zone or a demand zone, and again after that there should be a signal by the AI engulfing candlestick pattern indicator in either bullish or bearish direction. For example, if at the demand zone, if the indicator gives us a buy signal, then we should go ahead and take a long position, and at the supply zone, if indicator gives us a sell signal, then we can go ahead and confidently take a short position. Now as you can see, the results of this trading strategy are amazing, and I hope you like this strategy. If you have any questions, please comment down below, and I'd love to answer them and clear you all the concepts that you need to learn about the supply and demand. Please make sure to subscribe to this channel, and also don't forget to like, share, and subscribe. See you guys in the next video. Thank you.